What's going on, family? What's going on? Let me know if you can hear me loud and clear. We'll get started in 4 minutes here. Get everybody on here, rocking and rolling. Hopefully everyone's doing absolutely amazing. You've had an awesome Sunday, whether you went to church, whether you are spiritual in nature and just spent time with family, friends, and maybe you slept, right? Maybe you got a little workout in, maybe you got some work done, whatever it is and how you spend your Sunday, with all this craziness going on. Hopefully this is a place that you can come and we can not only get informed, but also get revived a little bit, kind of just that good energy, that good spirit. So yeah, if you're re-listening to this and re-watching this, you're more than welcome to skip ahead. I always give roughly about a 10-minute buffer. Just allow folks in the YouTube algorithm to come on in. We're almost to the 2,000 subscribers. Absolutely amazing. We've been just pumping the videos out, and it has been really cool to see, right? Because I've been on the social streets for a minute, whether it be the Clubhouse streets back in the day, I've been on Snapchat when it was before it was hype and the young kids. I've been on Instagram for a minute since it came out, since 2012. Obviously on the personal side, but more so on the business side. And I don't know what it was about YouTube. Just YouTube was like always one of those things where I tried it out when I was in fitness. If you go search like Brian McElderry or fitness or something, it should maybe come up. So I had a fitness YouTube, and I was always trying to find like what avenue that I could just inform people, whether it be inspirational, my podcast being on YouTube. And then I was like, man, like the production value, me wanting to just get information out very quick, and being able to pump out the videos instead of people having to wait for the editing and the delays and all that kind of stuff. And I found that the stock market and just the economy in general and me going down this wave was really, really like, it was freeing. It was just very smooth, very easy for me to sit down, turn on the camera, get my mic, and just inform folks. So if you've enjoyed this, I appreciate y'all being here, and allowing this to grow. The cool thing about the stock market or just the economy in general is, as I was like, man, like there's so many things I love, which I still do life coaching. I still do one-on-one mentorships and coaching in general, but the markets just never stop. And the cool thing about it is they are also emotional in nature, right? People have emotions and fears and greed and uncertainty and doubts about, the decisions they're making on a day-to-day basis. And the markets and the news and the sentiment has kind of that aura about it. So it will never close, even though we have a government shutdown, but it will never close. It will be here before us, which it has been, and it will always be here out after us. Obviously, real estate's a tool as well. But just giving a little buffer before we start, allowing people to roll in. So let me know where you're tuning in from down below in the comments in the chat, if you don't mind, and we will get started at the 10-minute after the top of the hour. We'll spend roughly about an hour 15 together, if that's cool with y'all. I'm trying to get quicker in these, but there's a lot to discuss, and I do not want to water it down. Okay, so I actually created a little bit of a Notion template for me today because I was like, man, there's just so much to talk about. Man, Clubhouse. Those are the times. The Clubhouse streets. Those were the times. Just turn on your phone and you got to just get value and drama and information and misinformation and correct information. Crazy times. So cool. We are at the top of the 10-minute hour. Welcome everybody to our Stock Sermon Sunday. My name is Dr. B. If you're tuning in here for the first time, maybe you've gotten referred, or maybe you finally said, okay, I got a Sunday afternoon or a Sunday evening. I'll see what this dude has to talk about, right? If we know each other, I appreciate the support. You could be anywhere right now, but I do believe personally that the information that we are presented with on the streets of YouTube and other platforms can change people's lives. Like, people are looking for answers, and the answers that some of us have can just get people to think differently. My role and goal here on the streets of YouTube and any social platform, even in my coaching 101 and whatnot, was never or has never been to persuade people that this is the right thing. Whether it have been credit, if you know me from back in the day, whether it have been Airbnbs that I've run, whether it be have been Turo and everyone saw me with all the cars, or if you met me way before then and it was life coaching and inspiration and that deep, deep talks that we've always had, and that's always been included with what I've done. It's never been to be one directional and one dimensional, right? So if you see me and hear me and I may sound a little bit different than your other person that you may watch around stocks, just know I'm not unidirectional, one directional, one dimensional, I should say. So I won't belabor the point. Let's go into what we've got on the docket. So you've got your notes, all those good things. My format here on the Stock Sermon Sunday is going through the fundamentals. Okay. So the fundamentals are the news, the data reports that we have, the earnings reports that we have, what's going on in the economy. So some of you have come here from my social platforms and you're like, Brian, like, are you going to kind of talk about this government shutdown and maybe the stimulus checks a little bit that have been kind of talked about? Like, what does that mean? Like, should we be prepared? What if I get it? Like, what's coming next after that? So I'll discuss that briefly. If there's any corrections that any of you have, if you know a little bit more than I do and you want to comment down below, please feel free. I don't project on here to be everything in every little detail, but I try to be as correct and on point and the due diligence on the research as I can be. All right. We'll jump on the charts. That is where the money is made. And it's also telling us potentially what is coming. So even if you're not a trader or an investor, or you came on here for one specific thing, and you're like, the stock market, okay, yeah, but I'm not really interested in that. I'm interested in what's going to happen to my family or what's going to happen to my real estate or cars or interest rates. The charts actually tell us what is coming because it gives us price historical context on what has happened in the past. So we can go back to 2008. We can go back to 2001. We can go back to COVID times and see on the charts what was happening prior to that time, right? And history repeats itself. So why I keep pressing and showing people like, look at the charts, and people are still like, I don't get it, Brian. Like, it will come to you and you will start to click, right? A pastor of mine recently said here in Vegas that the message that you deliver sometimes doesn't hit people right when they need it. So I will keep delivering the same message over and over and over and over and over again until it hits you. You're like, okay, maybe it's time for me to pay attention. Okay. Maybe it's not as hard as I think it is. Right. So whatever that is for you, I appreciate y'all being here. All right. So that's our rundown. Let's jump into it. Let's share the screen here and get to it. If you could hit me a like, subscribe, maybe we can get to that 2,000 subscribers today. Okay. That'd be awesome. We're about 8 people off. So if you can message people, send people out, we're about 8 people off from getting to 2,000 subscribers. And I do believe it's just going to continuously grow. Next goal is 10,000. And then we're off to that 6-figure mark and try to get a plaque on here. Try to get a plaque. I'm going to celebrate you all for that. All right. Okay, there we go. Cool. All right. This is our Discord here. So you see that. We do have our live event coming up. So a lot of people have been asking, hey, I've been watching you for 6 months, a year, whatever, seen all this stuff, and I haven't been able to jump in all year. I've been kind of busy figuring out other things. If you're trying to start off 2026 in a way that, is less stressful, you want to learn the stock market, you want to kind of get the introductory, or maybe you need a refresher, right? Maybe you're a person that's like, hey, I'd like to be in a little bit more confined environment, ask some questions, right? We got a 2-day virtual live event. It will be on the 17th and 18th. So a Monday and Tuesday. Okay. In the evening time. I try not doing it on the weekends. People are enjoying their time. So it's getting darker earlier. So on the 17th and 18th. So that gives you a week to go ahead and sign up for it. It's $47. Okay. I did have to put a little price tag on it to see who's serious. So it's $47, 2 days. In my opinion, that's great value to get introductory, ask questions. You'll have the recording from the live event. All right. So Brian, what does it include? Here we go. So it's 2 days. It touches on options mastery. So trading, the overall beginner start of the stock market. So just being able to have a confined environment, not maybe the stuff here on YouTube. Sometimes it's kind of conjumbled, trying to have organization. So just understanding market psychology. How do you read the stocks? How do you read this? How do I know when to buy long-term? Should I buy at all? understanding when to hold cash to the side, when to buy a said stock, understanding fundamentals. So some stocks are on discount, but are they really value, or are they in severe amount of debt and they're just not going to ever recover? Right. So we'll talk about that on the first day. And the second day is kind of looking at the futures market. I know a lot of people have been interested in what in the world is futures, and just looking at these two things to understand how they flow and also to be able to predict what may be coming. Right. So if you're a person that is not a fear monger, right? If you're a person that, whatever, it'll just kind of bypass, it's the same thing all the time, I won't pay attention, right? But what if you could have known about the 2008 market crash? What if you could have known that the dot-com bubble was coming? What if you could have known that kind of COVID was coming? You didn't know exactly what it was, but what if you knew that something was coming, right? That this is just the spur of it. This is just the start of it, that we will have another bear market, that there will be another big event, a black swan event, or this kind of, I don't know what's going to happen, right? Based off the chart. So if you are that person and wants to get a start, beginner, if you have a person that, you love, that a friend, family member, whoever it is, coworker, that may be just interested in understanding the stock market. I had a friend of mine recently that, had his son invest to a one-on-one mentorship. He's 20 years old. He's like, hey, my son, I want him to learn the stock market. Brian, can you teach him? Right. We did 3 sessions together, and he is now a master on the charts already and understanding when to buy his favorite stocks coming up. All right. So just want to get that out of the way. Let's look at the little itinerary that I have here and kind of touching on the first thing, just kind of get these economic events and things out of the way. All right. So the big question is the government going to reopen, Brian? Like, I don't know. Right. They're in cahoots. They're talking right now. Right. They're trying to figure out, and I'm not here to talk politics. Yes, I do have a side. Yes, I do have my firm beliefs, and I don't really center them in any man and or woman or politician in general. There are people in power that unfortunately or fortunately are able to make decisions on our behalf. We have to react to those decisions and understand how to prepare to move forward. So if the government shutdown continues to linger, it can continue to linger. Right. So we can't predict when this thing's going to happen. It's just going to happen, and it's going to be when they want it to be. OK, now, what I do think, based off of the stock market and based off of the fear and greed index, OK, which tells us that the market is in a position where it could rebound. Right. So if you saw on Friday, man, the dip was kind of bought. Right. If you saw that on Friday, the dip was kind of bought. And I'll show you on the charts in just a second. How might that, be a good thing, or how it could be a fake out? We'll look at both scenarios. Okay. So the market's in extreme fear. We were in extreme fear in April. Okay. When the tariffs were coming on, the market just kept dropping. There was bad news after bad news after bad news. And then May came and Trump said, let's put tariffs to the side right now and we'll focus on other things. And everything's good, and the AI race and all this stuff. And it just started pushing that to the side. Right. And guess what the market did? It rebounded for the entirety of the summer plus some. Right. So I like to talk in that way because I do have beginners that come on here, or someone that's just still trying to understand, how do I develop a market sentiment? And when you develop a market sentiment, you can see how these things correlate. So it really doesn't matter that everything is bad right now necessarily. They could flip a switch and say, hey, my bad. By the way, we're going to give the TSA workers their jobs back. We're going to, refund. We're going to give them back pay. That could be the short stinted upside, right? But guess what? That does not negate the fact that there's still inflation, that there's still people that don't have jobs. There's still people that can't find jobs. So all these little positive negatives, I'll show you on the charts. This is what happened leading up to the 2022 bear market, right? We had COVID, right? Stimulus checks, inject money into the market. It raised inflation. Everyone's like, man, we got more money. Cool. We can, the interest rates, they're cut. We can buy homes at 0%, 1%. And guess what came the next year? A bear market, right? So why I posted that on my social media. If you follow on my stories, please keep up to date with my stories. That's where I post most of the things, and on my Twitter page, and on Threads as well. Just kind of updates and sentiments. So These could be little short stints to keep the market and keep everyone going to the upside. Okay. Until this like kind of rug gets pulled out from under us at some point. Okay. But to this point, it's not happening as of right now. Okay. And I'll show you in the charts once we get to those. So the government shutdown, that is that. I just wanted to mention the Houston TSA protest. What's happening? TSA workers in Houston protesting for better pay and work conditions. Why it matters. Labor disruptions could slow travel. Data affects airline stocks. Delta, United Airlines, and American Airlines. Market tie-in. If travel demand slows or logistics are disrupted, it may weigh on consumer confidence or discretionary sectors. So you can kind of see that we're trying to correlate what's happening to some of these stocks. So your Lululemons, your Nikes, your Targets, your Walmarts, right? The stores that you purchase from, anywhere you're going to a retailer, that's consumer discretionary. Why Kava is down, why Chipotle is down. Maybe, Starbucks is still holding up because Starbucks is a proven winner over time. But even Starbucks is kind of hovering around that $80 level, trying to recover up. So all the consumer discretionary, people are still kind of weighing on, do I spend money out or I just go to the grocery store? Right? Like maybe, there's still spending going on, but as we know, the spending has slowed a little bit. Okay. As far as discretionary things. Okay. So that is the Houston protest. Government shutdown. We talked about that. Congress still deadlocked on funding, potential partial shutdown, market reaction. And this is the context here I was just talking about. Shutdowns create short-term volatility because there's uncertainty, right? So we have uncertainty in the market. That's why you saw a pop, a fade, a pop, a fade, a pop, a fade all last week. So if you were buying the dip, just thinking, oh, we're in a bull market, just go up, and you didn't know how to trade last week, which is why I created that last video, how to buy put options, right? That is what happens when there's uncertainty, right? People begin to panic and take profits and take profits and take profits. And guess what? We're still in a bull market. Now we've got to see what happens this week. Okay. This sector watch on the government shutdown is healthcare, defense. Government contractors could see short-term dips, which healthcare is still kind of dipping a little bit. It's on an opportunistic side, in my opinion, of a buy. A lot of defense stocks such as Lockheed Martin, Kratos, a couple others, if you have defense stocks on your watch. And then you have this Trump's 50-year mortgage proposal. Okay, I think we all know, and this is not political, that there is something behind this, and I understand from a surface level view what he's trying to do. Okay, whether you agree or disagree, a surface level view is saying, well, if people say they can't afford homes, let me just give them opportunity to get a home, but they will never own that home. Right? They will pay more in interest over time. This is for a specific person that has a specific salary that, just want to keep paying on a home. You might as well rent. Like you will, in 50-year mortgage, that's like increasing the car loans to 80, 87 months or 85 months or things of that nature. Like I don't necessarily agree with it. Right? Whatever your view stance on that. So I just wanted to, put that out there, that interesting enough, like what you're essentially the White House right now, in my opinion, and I don't want to get into politics. I know it's like, Brian, just say it. But this is I want to keep the uplift of a stock and how do we make money? Because Trump's in general, the White House right now is trying to essentially keep the morale of the American citizen up. Right? That's he's a salesman, right? He's a business owner, he's a businessman. So if I keep the morale of everybody up by saying, hey, this is possible for you, this is still good, right? The economy's doing better than ever, right? The gas prices, and yeah, you're talking about minuscule things from previous, like taking over a previous regime. Yes, I understand the president's first term is never his real first term. You're taking over someone else's. So doing the best you can. Right. I'm reacting. I'm not really thinking about, I'm just paying attention to what they're doing. Okay. The AI race, OpenAI, Anthropic, Google, Meta, accelerating releases. we saw that short opportunity. If you didn't know, Michael Burry, okay, if I type it in here, Burry short. And it's one of the movies that I recommend people watching if they get into the stock market is Understanding the Big Short. Okay, understanding the historical context of the stock market and how it has cycles, right? And there's always going to be something. So the Big Short too, that's funny. Right? So Michael Burry, funny enough, I associate myself because I like this to short the market. Actually, I like puts. I like when there's big red because I think it's a double entendre. I get to make money on the way down and I get to buy the dip. And the funny enough story, if you don't know the Michael Burry story, he is an MD, right? So he's a doctor, right? He was medically trained and he got into economics, and next thing you know, he is this, economic genius, worked in, various different ways, but essentially he shorted the market, made a bunch of money, and quote unquote predicted the 2008, 2001 situation. Okay. So Michael Burry, he's shorting the market, and people are kind of, why would he short Palantir? Why would he short NVIDIA? Okay. That makes no sense. You have two of the powerful companies. You have NVIDIA, the most valuable company in the world right now. Why would he short the most valuable company in the world? And that's where I'm like, did you look at the chart? Right? NVIDIA, in my opinion, was overextended. Right? So when the market was overextended, he's seeing things on the chart, or big time hedge funds and investors are seeing things on the chart that are showcasing that their risk to reward opportunity is better to the downside in the short term. So when I hear stuff like, well, he's going to lose a lot of money, he's shorting against the market, never bet against the market. It's like, yeah, but the risk to reward, there's very limited more upside in the short term. So he just made, I don't know how much, but potentially billions of dollars or multiple millions of dollars just off that short he had last week. All right. So Palantir is a different story because Palantir is trading at 600 times its valuation, right? If you don't know what that means, look it up. Okay. But 600 times its valuation. That means the price of Palantir based off its valuation or worth is off. So Palantir, in my opinion, was probably worth the short opportunity. Okay. So there is the AI race. We're going to talk about a couple of things today as well on CoreWeave and how CoreWeave and a couple of these data centers, and we have a lot of quantum computing stocks that will be reporting this week. Okay. And the final piece, which is introductory into our first 20 minutes, the final piece here is what people were asking for on social. And Jeff, if you're here, is going to be, what about these stimulus? Okay. What about this stimulus? And I'll just show you on the charts that last time we had a stimulus, SPY. Okay, I'm jumping ahead here just slightly. If I take off everything on here, and just from a chart perspective, this is 2020. Okay. So 2020 happens, right? We were running up into 2020 from, guess what? Trump's first tariffs in 2018, which was right here. Okay. So if you mimic this is the tariff situation of 2018. Okay. Some people weren't in the stock market heavily or weren't looking at charts at that time. Most people got involved heavily, more so, in my opinion, in 2020 when they were trying to figure out how to make money in the stock market, or this was a big dip. Okay. So 2020 happens, injection of stimulus checks right here. So from a psychological standpoint, guess what happens after that? We run, right? We run for a year, 2021. Okay. Guess what comes that following year? Bear market. So if we repeat this with history, okay, we could run for 2026 because the AI race is still heavily involved and people want to pick up more AI stocks. There's more people involved in the stock market more so than ever because they're realizing that their wage to inflation ratio is not really matching. So guess what they're going to do? They're going to try to figure out how to increase their income with the money that they're making from their jobs, businesses, whatnot, i.e. assets. So buying up assets is the only way that I can fight inflation. So we could run into 2026 a little bit more, but then guess what? Right? about a 4 to 5 year bull run, which is what we've been on since really 2022. Look at this. From 2022, how many years is that into 2026? 4 years, right? So we have a 4-year bull run from our last bear market. Okay. Guess what? I can go all the way back here into the run up into 2007. Well, guess where that was right there, 2002. We ran up all the way into 2007. How many years is that? Roughly 4 years, right? So let me check the chat. Make sure everybody's still with me. Got to get a 5 in the chat if we're in agreement. 5 in the chat if we're in agreement. 5 in the chat if we're in agreement. Does everyone see the sentiment now? The sentiment. Everybody good on the 5s? 5s in the chat. Everybody good on the sentiment? Do you see how the charts are associated? And I hate to belabor the point for people who've been here before, but I want people to, like I said earlier, to start really getting like, oh, wow, there's a system to this. This isn't happenstance. This isn't conspiracy. This is a system. The market tells a story, right? Are we good? My man Brian with a Y. What's going on? What's going on? So now everyone's got a light bulb on like, oh my goodness, I'm seeing it. 4 years, 2008. 4 years, or roughly all the 90s.com there. 4 years, 2009, and we come into what, 2014. This was a huge run right here from 2010 roughly. Right, 4 years from there, 2016, right there, right? So we're coming up on that time. We've got about probably another year, in my opinion, from 2026 of, in my opinion, the bear market will start happening maybe summer or fall of 2026. Does that mean stop buying? Does that mean, oh man, what's going to happen? No, it just means that, cool, people might want to consider maybe trimming, maybe taking some off the top, maybe considering what am I up 100+% in, things of that nature, right? So we have not broken down just yet. Cool. All right, let's go into this week. There's our sentiment. Okay, that's what we normally do, about 20 minutes of getting everybody on the same page of a sentiment of the overall economy of what's going on and seeing a further outlook of what's to come. All right. Now we're focusing in on what's going to happen this week. Trading opportunities. Now's the time for anyone to maybe put some in the chat. If you want me to cover a specific stock, go over maybe something that I don't have on my watch list that you have maybe in your portfolio or something like that. You want me to give a sentiment on or a charting analysis on, I can do that. All right. So let's go into, let's see here, trading floor, and then I'll go into the economic calendar. Okay. Whoops. Let's go into earnings first this time. All right, earnings on the watch. CoreWeave. Okay, make sure that I didn't mess anything up. Doing good, great videos. Appreciate you, Brian. CoreWeave. Okay, that is going to be a main watch on Monday after close. Okay, it's sitting right now around $100 to $105. Okay. And I personally think it's a good buy at that mark. I'm not really interested in options calls just yet because CoreWeave is not necessarily profitable. It's not making any profit just yet. It's just associated with NVIDIA. And because it's associated with NVIDIA and it's one of NVIDIA's biggest investments in their portfolio, I want to keep a very close eye on it because it does have a lower level down to the low 80s, okay, if it does pull back. Kind of like what Palantir did with their earnings. Everyone was hyped up on Palantir. It's going to beat, it's going to go higher. It popped and pulled back, okay? So a lot of these AI stocks, a lot of these quantum computing stocks, there's still kind of iffiness around the spending or the sentiment, and people are like, cool, great, I want it lower, right? So I think it's a great share buying opportunity if you want to pick up some CoreWeave shares, some partial shares, some fractional shares, get a little bit involved. I always still like to wait after to the earnings reports, okay? Because then it gives us a sentiment like, great, it's good, we can buy, cool. Big Bear AI, great buy in my opinion, around $5 to $6. Another AI stock that we've got heavily on watch that could double up, triple up, from 5 to 10, and then ultimately back to 20 plus. And I'll show on the charts about that. Rigetti, another one that's been hyped, not hyped, but another quantum computing stock right here that has been really good this year. Okay, it's on the charts. I think Rigetti went from what, $5 when we called it out. Yeah, roughly about $5 to $10 up to 60. Okay, so if you got Rigetti, awesome. I think it's at a great buy anywhere underneath $30. I like it back kind of in this $15 to $20 range if it can get back there. But yeah, it's a first start opportunity on the pullback from Rigetti right here. It's sitting at a 50% discount. We talked about it inside of Leverage University that a lot of us like to buy things that are a little bit, not uncertain, but still kind of need to prove themselves at about a 70% discount, which would pull it all the way back down to roughly around $20. Okay. So Rigetti, okay, I would be patient on it just to be sure, but that is another one that I've got my eye on to see how they report. Okay. Nebius, NBIS, that is associated with CoreWeave and the data centers. Okay. Data centers, cloud software, all that included with the AI movement, the AI race. So these two are going to be highly important of seeing how that moves the market. Nebius as well, I do believe is not profitable as well, but it is moving very heavily with CoreWeave this year. Okay. More this week, Oklo is going to be on a lot of people's watch right there as well. Again, the only thing about Oklo is it's not generating any revenue. Okay. So these stocks that don't generate revenue and they could be massive in the future. Okay. You want to be very careful where you start going heavy in. I'm not sure who I have on this live today or who's going to be watching that, but I just want to bring you aware that I'm not saying it can't go to 200 plus and Oklo can't go up here. I'm just saying that it ran from $20 in the most recent dip in April all the way up to 200 with no revenue. Okay. From a technical standpoint, is it on a technical pullback roughly to around, in my opinion, it needs to get back to around underneath $100, in my opinion. Okay. Underneath $100. It is also forming somewhat of a head and shoulders. If you're familiar with technical terms, this is a shoulder, neckline, head, neckline, right shoulder, and then typically it takes out that neckline and you go lower. Okay. See, it looks like a mountain peak, but that is a head and shoulders. That is a bearish or a pullback signal. Okay. So that would take us down into the $60 and $80 range. Okay. Down in this zone. And there's some gaps down below, as you can see. So it could come all the way back down to 20s. Okay. So be careful with Oklo, in my opinion. Generating no revenue is reporting this week. And I'm touching on these because these were the hot stocks this year in the last really 3 months. And people made a lot of money. But once you hear about them, is it the right time to get in? Okay. Beyond Meat, again, I'm not going to touch on that. It's a squeeze stock. People made money on it. It went from 50 cents to $8. I would stay away unless you're interested in that personally. It's like an AMC. Circle, another one. It seems like this whole week is full of the hype stocks for 2025. Okay. Hype stocks for 2025. So I'll pay attention to some of these. One that I think you should keep an eye on, is JD. Okay. JD. And it is a Chinese stock. Is the Chinese Amazon, if you want to just consider that, kind of like Baba. But this stock right here, in my opinion, has a great charting or a great technical outlook. Okay. Great technical outlook here on JD at $30. Okay. I want you to look at Baba's chart right here when Baba was down here like that. Baba was at $80 and it went all the way up to almost $200. Okay. So it was sitting down here, just waiting and then finally took off. Any China news, anything like that, any positivity. And JD is kind of doing the same thing, right? Kind of curling up. If you want to consider that more of a bull flag right there, right? We could have an uptick in JD to take off right here. So Shares for safety. I would say leaps or long dated calls if you're interested. But JD, pretty good, decent chart. I'll pay attention to their earnings, see what they do. But nothing really interesting as far as my day trading goes on this week. It's more so kind of things that could just pop off for 2026. So that's kind of how I would look at this week, is something like what could be that next thing for 2026? What's the next Palantir? What's the next NVIDIA? What's the next thing that's kind of sitting in some of these earnings setups? Okay, cool. Check chat. Make sure y'all are good. MSTR, gold on a daily, building for another leg up. Yep, exactly. So that will tell us a story for sure. And I apologize for lighting again. Got to get my big light up in here. So if it gets a little bit dark, I do apologize. Y'all don't need to see my face anyways. All right. Let's go into the weekly economic calendar. Okay. And this is very important to pay attention to, because with the government shutdown, there's been delays of reports. Right, which is why I'm not getting too on a high horse about what's going to happen yet, because we still haven't had jobs, non-farm payroll jobs reports yet. That was supposed to be on Friday. That was delayed. It was supposed to be like 2 weeks ago. So if you don't know that, these data reports give the Federal Reserve information they need to cut rates or to pause rates or to hike rates. So from the last Fed meeting, and I think Fed Powell was supposed to be speaking this week, kind of giving some sentiments. So the reason why the market pulled back the last week or so is because, or since the last Fed meetings, because he said that we may not have rate cuts for December. That is not bullish, extremely bullish for the market. So there's still data that needs to be released. Okay. So this week, volatility watch here, earnings watch, dividends. Let's see. Let's go on the chart here. We've got ADP that's supposed to be, so are we having it or not? I don't know on Tuesday. We'll have to check. We also have Veterans Day. Shout out to my veterans. Thank you for your service on Tuesday, November 11th. November 12th, if y'all want to wish me happy birthday, you're more than welcome. I got the big 3-6. For those of you that think I'm still in my mid-20s, I am not. Okay. For those of you that are my seasoned elders in a good way, you're like, you still young, man. So I get both. But I will be 3-6 on Wednesday. So if y'all want to give me a birthday shout out, if you want to support the channel, if you want to join Leverage University this week, that'd be awesome birthday gift to support you. All right. So Fed Powell, we got a lot of Fed speakers on Wednesday, so could create some volatility. And then we got initial jobs claims, which anything on this chart right here that you see that does not have a time, okay? So if you want to take a screenshot of this or a picture of it, anything that does not have a time is still up in the air. So if the government opens back up this week, then we'll have all these data reports and the market's going to go like this, okay? If we don't have these data reports, then the market's going to still try to figure out what's going on. That's why the market ideally was pulling back last week, because they're like, I don't know what's going on. There's still a government shutdown. We don't have data reports, right? So we don't have jobs data. That is a key thing for rate cuts. If you don't see anything on here, so initial jobs, inflation rate, we're not even sure if CPI is coming out this week, which is supposed to be on Thursday, okay? We don't even know if PPI is coming out this week, which is supposed to be on Friday. So I want you to keep that in the back of your mind when I go into the charts in just a second here to understand, Brian, but we're bullish. Yeah, we are. Okay. But we need to clear a key level. Okay. We need to clear a key level. So let's jump into the charts. Give me a 2 in the chat if you're ready. If you got your charts up, give me a 2 in the chat. Give me a 2 in the chat if you got your charts up. We're almost at the top of the hour, so we're right on time. 30 more minutes up in here, and I'll have you out of here. We good? We good? If you don't have your charts up, that is okay. Just follow along. Just follow along if you are new or you don't understand these chart situations, okay? All right, so what you'll hear in the streets, okay, in the streets of the stock market in general, okay? And if you're not hearing this, I don't feel like they're telling you the truth, okay? If someone's telling you to buy the dip right now and not showing the concern, in my opinion, is doing you a disservice. Okay. So what I will say is that right now, look at this channel that we're in on SPY. Okay. So I have rationale to why I say, hey, Leverage University members, hey, this week, right? We need to be a little bit more patient. Last week, we got a clear direction, downside, right? This week is kind of neutral. We don't know yet. Okay. So that means I'll be sizing down in my trades. That might be, I'm a little bit more patient. I might be more selective with my trades because we don't have a clear like direction of which way we're going all the way back up. Or do we bounce and come back down a little bit more? Okay. So this trend right here on a daily time frame was slightly broken. Okay. But it reclaimed kind of back into the channel just slightly. If I pull this here just a little bit, you can kind of see it a little bit better there. So it came out of the channel, back into the channel, and we're going to try to see if we can get some positive data. Can we go back to all-time highs? Based on the fear and greed index, yeah, we could. All right, this is still a bullish structure in this channel, okay? That level that held right here or reclaimed is right where we talked about last week. If y'all been keeping up with the videos week in and week out, what levels did I say? If you've been highly paying attention and watching, I'll know who's actually watching. It said 667 and 663. Did we not talk about those exact levels? 667 and 663. Okay. So 667 is going to be on SPY, that key support that we're going to need to hold for the remainder of this week. Okay. Now, the level above that I want you to put a big, I can even bold this even more, right? A big yellow line or whatever color, or a big line above, if you've got your charts on, or just turn your alerts on, is 674. Okay, 674. Why, Brian? Because that is the tariff high when Trump came in and said, hey, tariffs, right here back in October. And we went all the way down to 650, okay, in one day, right? So that level right there, we broke underneath. So if you've been watching chart sentiment, right, we've got two things that could happen on the overall market, and we could gap up above it tomorrow morning, okay? So if the futures market tonight, and you're like, Brian, right now it says on Robinhood, I don't like to look while I'm giving this. I will check afterwards, but right now it's like at 673 and 674. Yeah, I know. That means we could gap up above it tomorrow, but we've got to hold above 674. Okay. So if you see it above 674 on SPY, okay, and we hold for the morning and we hold for the entire day and we kind of build above 674, then we can get a little bit more bullish for the week. Okay. If we start having trouble at 674, then I want you to be careful on the upside calls that you have for maybe the week or even into potentially next week. Okay. This was a great dip buy. Like if you bought this dip and you wrote it up, at the end of the market yesterday and you're like, man, we're bullish on Monday. Cool. That's fine. We could be green tomorrow. We could be maybe green on Tuesday. But what did I just show you on that economic calendar? That CPI and PPI report. If those don't come in, or if there's uncertainty around that, we could go higher and come right back down. You get me? So I don't want anyone, and I always say this on my channel, I don't want anyone to be fear-mongered, but I also don't want people to be trapped, right? Kind of like what I said last week up here at the top, right? Be careful at this 690. Be careful up here. If you're holding calls or, man, we're bullish, keep going. And then you get slammed and you got to stop out, and then you keep holding, and you lose money and you don't know how to play puts. Okay. Same thing here on the chart is we have to have a reclaim. I'll show you what it looks like. Okay. I want to see almost a candle like that for the day. Okay. Because guess what? Then we can have a pullback to 674 like that, hold, and then cool. We got gap to fill all the way up to 683. There's your next target. Okay. 683. Well, Brian, does that mean all-time highs? Yeah, it could if the government, opens back up, everything's good. See, I told you by the dip. Cool. But I'm talking about intra-week trading. Okay. I'm also a trader. Long-term investing is very easy. Buy 5% dips. You should have bought a dip last week. Your favorite shares, buy the dip. That's not difficult. But the intra week back and forth, when you're trying to trade and make income and make money, right? You have to pay attention to what happens day in and day out, right? Are we going to all-time highs again? We don't know yet until it clears above 683 on SPY. Okay? Because we've seen it before, right? It could pop here. That is a lower high. Okay? And I want to show these things because I can always come back to this video and be like, was it proven true or was it dismantled? And I have it on recording. Because if we come here and fill that gap, and the next thing you know, we're not good. There it is, right? And we fail back down, okay? So that's why I'm saying shares are good. Remember when I just said shares are good? Buy the dip. There's Meta on discount, Netflix on discount, even NVIDIA, in my opinion, and if it's your first time buying NVIDIA, get involved, but I do believe we have a bigger dip on that. But yeah, buy the dip. Shares, fine. But call options, I'm still a little bit iffy on holding swing call options up here at these highs. Okay. Everyone get me? Fives in the chat is my agreeance. Fives in the chats and my agreeance. Everybody good? Fives, fives, fives. Everybody good? Okay. Cool. So we've got this range right here. If I go into the 1 hour time frame, do you see that I've got a gap? Right? So that can realistically happen. Break above 574. Cool. We hold 574. Cool. NVIDIA earnings comes out on the 19th of the month, which is in roughly 10 days. We have good NVIDIA earnings. We pop up to here. Everything's great. Awesome. Right? And we've recovered this move and we're back bullish. Okay. So 674 is our bullish pivot. That's our bull bear pivot. Okay. What do we do? It's going to be based on a lot of the government stuff, in my opinion, and data reports. But I do like this move back into this gap because that gap was not filled right away. So I do like that. Move back into 583. All right. So stay bullish until proven otherwise. But I just want to give you kind of that devil's advocate pivot point right here, just so people don't get faked out. All right. Let's see another level here on the SPY really quick that we could pull back to if we do get above there. Okay. So just because that's our pivot, Brian, man, it fell back underneath 674. There still could be a trap. Okay. So just say we do this. Okay. Which I'll be watching price action in live trading. If you want to live trade with us this week, the link's down below. For Leverage University, there is a Black Friday deal, right? So type in Black Friday. So a lot of y'all were asking for that Black Friday in any of the offers inside of our WAP platform. Okay. So if we pull there and we pull back here like that, man, it's failing. Look at this level that held last time. See that? Right? How many of you know what formation this is? Inverse head and shoulders. See that? So there's a lot of traps that kind of happen around these pivot areas, right? So we could pop up to here, then pull back. Man, we're bearish again, and then trap everybody at 670, right? It holds 670 and then pops back up and then goes higher. And then the government opens back up and everyone squeezes out and we go back higher, right? So that's why this area, probably tomorrow, I will probably trade indices, specific stocks if I see something. But Mondays and Fridays are not necessarily my best trading days. I've been transparent about that with my community. So as much as I want to make money on a Monday, it just need to see what happens personally. If I see something, I'll take it, but just really want not to mess around right here if it gets a little choppy or fake out or whatever. All right. So there's SPY. Everybody good on that sentiment for SPY? Okay. On Qs, tech index. Okay. I haven't turned on my moving averages here, but you can see I've marked it there. The moving average also associates right with that level. Okay. So the daily 20 is very important. As you can see, we're in between these moving averages. We start getting below the daily 20. That is more of a bears have short-term control. Okay. You see exactly where the bulls stepped up. They're like, bears, you're not taking over the daily 50. Okay. We're going to hold that daily 50 and we're going to battle in between here. Okay. We're going to battle in between this level right here. Okay. In this zone. You're going to have to show us what you can do in this zone right here. Okay. So this is the battle zone. What do we do out of this level here? And that level for the Qs is going to be above, in my opinion, this daily 20, which is sitting roughly at 615. Okay. So the 674 is roughly around 615 on Qs. Okay. So we need to get back above that 615, in my opinion. Daily 20, break back above there. Then we can start building and squeezing and going higher. Okay. So that is going to be your level this week, is sitting right at about 615. As you can see it here on the hourly time scale, that is above that previous rejection area. See there? Squeeze, push. Okay, cool. Take the first pullback. Okay, cool. We can go back up there like that. Okay. The top end range that you'd want to take it to is roughly around 630. Okay. Because we want to watch, again, this lower high situation. What did I show y'all before on the monthly time scale? Back last time we had tariffs. Okay. 2018. If you weren't trading during 2018, which I just got started trading, not investing, trading in 2018, the tariffs were very interesting back here because we had, let's see, right here. I said to everyone last week that November, December are typically bullish for the market, right? Typically bullish. But look at this tariff end to 2018. You see that? So that's interesting. That's interesting to me because this is November, which is technically supposed to be bullish, and we got bearish sentiment all November into December into the end of the year. And guess what? Then we pop and go higher. Okay. Here's the government shutdown, which also associated with 2019. So this is the government shutdown tariffs right here. So when people say like, man, the government's going to open back up this week, you don't know until it says it's going to open back up. Right? The government shutdown was right here in 2018. It opened back up into 2019 right here, and then we got bullish. So be careful in this area until they announce, buy the dip, buy your shares. But can we go lower? Yeah. Can we go higher? Yes. No one knows. We react. We don't guess or gamble when it comes to trading more specifically. Shares, buy at 5% and then buy at a correction territory. Okay. Cool. There's Qs. You can see this box. If you like to draw boxes, there's the box right there that we're in last time, right? 617 or so, kind of in this box, roughly around 615 to 600. Okay. IWM. IWM is pulling back, and it is kind of gone into a lower high situation here simply because rate cuts are good for small cap companies. I've mentioned that multiple times. So IWM holding this 636, but it does have more of a bearish sentiment because it's waiting on rate cuts and so on and so forth. IWM is also below all of its moving averages, a little bit more than Qs and SPY. As you can see, it's below the daily 20 and also below the daily 50. Okay. Where did it reject when everyone, was like bullish, rejected off the daily 20? Bam. Guess what? It can reject off the daily 50 as well, which is right into 243. Right. So I love the daily moving averages because they tell me a story of more bullish sentiment, bearish sentiment. So it gets back above, goes right back to here. If it gets above there, that's when we squeeze. So it could do this, pull back like that one more time. Okay. So keep your daily moving averages on. Where's the daily 100 on IWM all the way down to 232? Daily 200 is more of a long-term buy pickup. We need to hold that. That is all the way down here. Don't suspect that unless we have some kind of weird rate cut thing that happens So, or rate pause or whatever they do. All right, SMH. Okay. And then I'll jump to MSTR, which people have put in the chat already. Okay. Going to the indices. SMH is the semiconductor ETF. Okay. We got a bullish pin bar here, bullish hammer candle. That is a bullish hammer candle right there, but it's right underneath the daily 20. Mark the daily 20. Where do we need to get back above? Which is for bullish for semiconductors going into NVIDIA earnings. Get back above 351 or 352 on SMH, then you can get bullish more so on semis. Okay, semis are still kind of questionable. They've ran a lot up into the end of the year, and people are beginning to take their profits. So please do not get too greedy until we get back above this area, and we can push back into 365 and maybe back into all-time highs. Mark that lower high. That's right on that lower high, which gives you that range from here, 352 back to 365. Okay. So there's that bull bear pivot, which is above the daily 20. Okay. The reason why I like a pullback on the semis is also there's some gaps down here that were unfilled on semiconductors. And that's why I believe that NVIDIA, AMD, all those semiconductors can have one more pop, and then people begin to take profits a little bit more heavily. Okay. Cool. Let's go into MSTR like I promised. MSTR. Yes, Brian. Appreciate you. Appreciate you. Why I watch this channel. I appreciate you, Brian. Yeah, so that pivot. I apologize for the darkness, man. That is what I'm buying on Black Friday. Another panel light. I don't have as much room in this room, so I keep saying that. You're like, Brian, I'm just listening to you, man. I'm really big on the camera quality. So yeah, 674. I'd probably like it, Brian, above 675 just to make sure. So calls above 675. If you see like an hourly hold above 675, you can get bullish, right? Back up to like 680, 677, right? And then 683 if it breaks above 680. But yeah, that's what I would say. And then, you know, if it fails underneath, then maybe some puts back down to 670, right? That $4 or $5 move back down. Yeah. Cool. All right. Was it MSTR I was talking about? Yes. Okay. So MSTR in the crypto sector did pull back to a really good pivot area here. As you can see, previous highs sitting right there at 200. Didn't pull all the way back down to it. I would have liked it all the way back down to probably 200. If we put on our daily moving averages, right, it's more in a bearish sentiment, okay? So it could have a pop, more of a dead cat bounce, but in my opinion, I'd be just very mindful of where you're taking it to. So if you're bullish, you're like, man, you know, MSTR, is this a dip buy? Is it great? Not really until it gets back above this daily 20 where you can really hold swing call options, okay? Back above that daily 20, which is 280. So if you're trying to, you know, play it back up, play it from here, which is roughly around, in my opinion, holding 240, and then playing it back up to roughly 260, gap fill, and then maybe 280, right? And that is that going to be that pivot point right there. So I like to look at the broader view because guess what? What if that is a previous resistance, or excuse me, previous support that rejects and comes lower again? Right, so it could pop all the way back up to that 280 and then come right back down like that, right? Which is why looking at the bigger time frames is very important, as y'all know, to make sure, is this truly bullish? It's going to squeeze all the way back up to all-time highs, or is it below all the daily moving averages? And I need to be a little bit more cautious that is more bearish than bullish, even though it's a green candle right here. It went from 219 to 240, man, bullish. Okay, take it back up to 280. That's a short-term pop. That's great. It's fine. All right. Cool. So yeah, you can take it back up to the upside. There is some risk to reward back up through this gap, which would take you right back to 270. Okay. And then reassess at 280, taking it to 300, then you can get more bullish. Okay. So however that suits you. Cool. All right. Anything else in the chat? Sounds like a plan to me. Yeah, no problem. No problem. No problem. Let me see. Okay, cool. Let me jump into NVIDIA. My biggest setups for this week for day trading. Okay, setups this week for day trading that I'm going to be on watch is Amazon. That's one of the ones, and I typically trade the Mag 7 or your core top tech stocks and semiconductors. So that is just what I trade. There could be great other setups, but I'm very comfortable trading those. So Amazon's going to be on watch because it had great earnings. I know it has a gap right here, but I do believe we'll probably be green for maybe Monday, Tuesday as a recovery, as everyone's expecting the government shutdown to open back up. Okay, so I really want to stay more on the bullish side for Monday and Tuesday than trying to play against the market unless I see a gap up and we have a gap fill back down. If y'all know, you know. Okay, so if we gap up tomorrow and I see a gap fill, okay, maybe I might short it for a short-term scalp on a Monday. Okay, so Amazon, if we look at it on a weekly time frame, we can see that it was a break and retest from its earnings. Okay, broke above this key 240 level and then broke above this 243 level, went higher up into almost 260 pretty much, pulled back right into that level. That is a break retest on a weekly time frame. And even though there's a gap right here, right, it's going to try to hold above that level. So Amazon, if it's not already in the after hours up to 250, that is my target for right now. Okay, which will be 250, above 250, then we can take it back up and breaking into 260 plus. Okay, so it would look something like this, back up into there, maybe a little bit of stalling, consolidation, and then if it government opens back up, then pushing like that. Okay, so want to be mindful up in that 250 area simply because we rejected right there, we rejected right there, and we rejected right there. Okay, so push up into 250, and then your hold would be roughly 243. Okay, 243, 244. So it would look like that. It's like, man, I missed the trade. It pulls back just slightly, like that. Holds. And then we take out 250. It squeezes. And then we go higher like that. Okay. So if y'all like the visuals, that's how the candles, ideally, you'd want it to look for a pop into there. Man, I missed the trade. Pull back just slightly. Then breaks back above 250. Enter. Take it back up to the highs. All right, so 250, I would like for to see how it reacts at that level, but Amazon could be just a bullish flag, breaks out of this consolidation, and that would be call options back to the upside on Amazon. Okay, now I do like this gap fill eventually, but Amazon's so strong that I'd probably not want to enter put options unless I see a bigger lower high failure back underneath this 243. So just say we get something like this, pop into there, and then for some reason it just has a bigger failure like that, right? That's where I would be like, okay, cool. I like that 250 as rejection. I'm taking it back to the gap fill, right? So that is how I would trade that gap fill area if you are familiar with my gap fill strategy, okay? Cool. Amazon, one of the top watches. Let's look at NVIDIA because NVIDIA doesn't report earnings till next week. So there's still a lot of opportunity. A lot of eyes are going to be on NVIDIA. Brian, what does it do? I think I gave an analysis on my put options video on NVIDIA. And we want to look at where this daily 20 is. So your pivot will be associating the pivot with SPY and QQQ. So if you're really bullish on NVIDIA, you're like, man, I want to grab out NVIDIA calls into earnings. I believe you can. I don't believe NVIDIA is going to miss on earnings. I believe it might be one of those Palantir situations where it pops and then we have a little bit of a pullback or something like that. We kind of react to see what happens. But I do not, in my opinion, do not think anything of NVIDIA not filling this gap when we're in extreme fear. Okay, it happens every time. I personally think NVIDIA with this big bullish flag, it breaks above, 190, starts holding in this zone, and then the market starts telling us, okay, we're bullish. The government opens back up. We're back into NVIDIA, back up at the highs at 210, okay? It does need to clear, this resistance level at 196, but ultimately, in my opinion, NVIDIA gets back above that 193, 194 area. I can begin getting more bullish on it more specifically. So look at this bullish candle right here that just catapulted off of this 193. It took it to 203, okay? So there are bulls sitting right here at this area if we break back above 190, just say 194, 194, okay, 194, 195, okay? So NVIDIA on heavy watch because the options contracts this week will still be fairly affordable. Next week, it gets a little bit more pricey because they're earnings. So the implied volatility will probably go up. Contracts will be a a little bit more pricey. But if you want to look at next week contracts, maybe to hold some, just kind of give you that interest right there. How much interest is on that 200s for next week, right? They'll probably be right around $300 something when it opens up tomorrow, right? $300-$400, but those 200s, 205s is a target. We just charted out. And then 210 is at the top. Okay. If you're a person that's like, man, I want to hold all the way through NVIDIA earnings. I don't want to miss this one. And I don't want to spend a lot of money, right? NVIDIA could go to 220, right? On their earnings beat. It could have a 220, a 215 target. 230, I know is in a lot of people's talks. That's possible. It just needs, it's got to blow it out the water, in my opinion, which I believe it does from the last earnings report where they didn't have some data that they had in their earnings report. So NVIDIA, high watch back to at least 210, in my opinion, with the market in extreme fear. Okay, so I will begin looking at next week contracts in short term. December 19th is also a good one that you could look at if you want to spend a little bit more money for more time. So I'm just going to give that one out. Okay, NVIDIA. And I'm usually not a person to say, you know, this is going to happen, this is going to happen. But with NVIDIA, I just don't believe that personally it is just going to fail and come all the way back down here. Now, if y'all remember, I do have a price target pullback eventually of 150. That is a bigger retest all the way back down here at 150, but that could be 2027, middle of 2026 once it gets to its top. And then we have a bear market, and then you get NVIDIA back at 150. Okay. So that is my ultimate pullback level, which is 150, which is kind of what we had when NVIDIA was at 150 and pulled back to 86 when we talked about that in Leverage University. Okay. Not chasing the 150 move, waiting for a $60 plus pullback. Okay. So just calling that out there, that 150 is my ideal pullback for NVIDIA eventually. Okay. Awesome. So keep a watch on that daily 20. You can see it's right in between these moving averages. That is a indecisive move right there until it breaks back above. It might already be out there after hours. Okay. So there's NVIDIA. AMD. That's an interesting chart on AMD because AMD is kind of my bearish setup, to be honest with you. It kind of gives me my gap fill strategy set up. Okay. My rising wedge, right? Broke trend. Okay. Back retesting the daily 20 back to 243. Right. Which is hard to trust with the market in extreme fear. But if that happens and I see some rejections around that 243, 240, right? That is possible. That is possible. All right. So I do not want to get in that range just yet because AMD has been extremely strong, obviously, but it does give me kind of more of a bearish head and shoulders type of setup here, there, pop up one more time, fail back under, and then come down like that. Okay. So AMD going to be on an interesting watch because I like, to be honest with you, I like shorting AMD. It's just, yeah. But got to be mindful of this area here that it pulled back to, which is at 223, 224. So that's a previous high. And probably the safer trade would be failing back underneath this 230 level and taking out that low. And then there's just nothing but room. Okay. So want to keep alerts on AMD because that is a bearish engulfing candle. Took out these last 2 weeks. Pop week. That is a very profit taking. I ran it up from $80 into, damn near 270, so just going to be watching AMD on watch, for a bigger pullback, but right here, still bullish. Okay. What else we got? We're getting at the top of the hour here. So about to wrap up. Anything else that anyone else would want to see? Sounds like a plan. Cool. Let's go into Palantir. It's another one that people have questions about. Palantir. Again, I'm just going to be watching the daily 20. Palantir's back into this range. Put a box there from 187 on Palantir to 173. Okay, breaks out of this box. You can get a little bit more bullish. Gap fill 200 plus, stays in this box. It's kind of indecision, right? What does it do in this box? Does it go up or do we come down one more time? All right. So Palantir, I'm just going to be watching because that quote unquote fear of the Michael Burry short is still out there. But Palantir, Hood, high watch here looks like it's up after hours. So there looks like there's going to be a gap up in the morning, which is actually going to be nice because that'll give me my put strategy. So if Hood is, let me see this. Is Hood already up at like 136? Right up into the daily 20. That'll be interesting. But Hood contracts on a Monday are pretty pricey. So Hood is pretty much right there at my retest level. Okay, so there will be a gap in the morning on Hood that will look like this. Okay, if it doesn't already fill. So it's going to be right up in there into the daily 20, as you can see right there, right up into it. Okay, so be careful, but we are bullish after hours. And that's kind of the sucky thing about options. You got to wait till the morning and your moves already happened. It's back up in there. And then you're like, man, okay. So if it's up in the morning, we could have that gap fill, pull back a little bit, and then we could see where we settle in. So yeah, Hood, it's already kind of up there. But there is a gap all the way up here, if you can see, for Hood back to 150. So I think Hood is trying to get back to that 150 target. So between as long as it holds above 130, right? Hood can go back to 150. All right, I would draw something like this on it from a lower high standpoint, kind of bullish consolidation. It would look something like this. Kind of in this channel, wants to rotate back up to the top of the channel. So Hood 150 is your target there. It's like NVIDIA's up after hours as well. Where is it? Up at 193, right up into it, right? Right up into our area. Let's see, a couple more. Let's see. So Trent, I'm still in Anyone Leverage University. We missed a big trade on Friday on AVGO shorts for puts. This is going to be I need to see where a true top is, but AVGO I think has more value, right? I think it has more value. So we'll see what it does, but I'll be watching this daily 20. So if I see struggling around 357 on AVGO, if it's there by the end of the week, I want to keep that on weekly watch. So for anyone that's not live trading with us in Leverage University or does not decide to join, and you're like, what is that? 357 AVGO, what I'm looking for is it's very heavy up here, double top. If it fails that yellow line or struggles, comes back up, fails back underneath, right? AVGO can pull all the way back down here like that if we do have a little bit more fear in the market. So I just kind of want to mark these daily moving averages right there. And those will be my pivot levels. If it gets below them, I'm a little bit more bearish. If it reclaims, I'm going to stay away until it finds a top. Okay, so that's 357 and 345, right? That channel right there. I'm below that channel, a little bit more bearish. Above it, let it go. Okay. All right. Google. It's another one I've been liking trading lately. I think it's a little bit overextended in my opinion. But still very, very bullish, obviously. So I want to draw that line right there. I want to mark the daily 20, which is all the way back down here. It needs to pull back, in my opinion, to the daily 20 eventually. The further it gets above the daily 20, that is when essentially it gets a little bit overextended and it can sit above it for a period of time, but eventually it comes back to retest it, which is at 265. So I like the shorts on overextended stocks like this to find a top and then pull back to that daily 20 eventually when we find it. Okay. So you can see here, gets above it, pulls right back to it. Okay. Back underneath it and then rides it and then eventually gets above it again, pulls back to it. Cool. So I'll look for continued shorts on, for puts on Google as well. The higher it pushes, if Google's back up in our 283 zone that we shorted on Friday, that could be a nice short as well for a pullback. If it breaks back above these highs, then we'll let it go. It's pulling back to trying to go to 300. Okay. So I would just let the market tell me where it wants to pivot, but any pops still questionable until otherwise. We need reclaims. All right. Wrapping up here. What final questions did anyone have for me? All the government and Trump news is noise, in my opinion. Yeah, it is. It is. I agree. That's what I said earlier. What moves would you make now that the government shutdown may end very soon? Let's look at it. So really quick for Ben, Skater Reel, Ben. So Ben's in our community. All the noise that's happening right now, that's all for day trading, right? So when there's noise and uncertainty, there's fake outs, right? Back and forth. So I have to find daily entries that make sense if I'm day trading. For anyone that's long or buying the dip, right? Take it long. Like if you got call contracts out to January, if you got call contracts out till next year with this extreme fear dip, I think that's great. But like intra week, I have to find the pivot points, right? And Ben knows that. So it's all noise, but I still have to have a trader's mindset on versus a long-term investor buy the dip. That's easy. Okay. Let's see what's on dip right now. That's a great value. So with the government shutdown, when it opens, what's on dip? Meta. So METU shares. Okay. METU shares. And I'm giving these because this is also a beginner friendly channel. So if you got a massive amount of cash on side, you do your own thing with regular Meta. If you can buy up 1,000 shares of Meta, 100 shares of Meta, I'm not sure who I'm speaking to on here. I know some people have got money. Some people are just starting, right? So Meta has a big opportunity with the AI race and also this big pullback that it is, in my opinion, the biggest value in the market right now for Meta at $600, going back to $800 and then potentially going to $900, $1,000. Okay. So Meta, that is one that I would, start picking up partial shares, anything, buying opportunity now. Okay. Start dollar cost averaging, start picking up heavier. And if you want to have a quote unquote cheaper version, right, we're buying METU inside of Leverage University around 20 to 25 bucks. Okay. So already started grabbing positions at 27, but it can come down. The market can come lower, right? That's what I'm saying, is that it can be irrational, just like in April, and it came lower for another month, right? So if the government opens up, then you're a genius and you bought the dip. If it drops lower, you still have more room. So METU, to answer your question, METU, another one that you can maybe look at, but I think still has some uncertainty, in my opinion, because their earnings weren't that great, were Netflix. But Netflix is not going anywhere, right? So Netflix, if you want to start buying NFLU, the leverage version of Netflix, you can start dollar cost averaging into it, in my opinion. I think a better buy would be closer to 35. So another $10 drop on it, but start looking at Netflix, start looking at Meta. Let's see a couple more. I'm talking about blue chip companies right now. Microsoft. I think Microsoft with this double top, it's a great dollar cost average value, but I think heavier buying should be back down here at the mid 400s. And if there's a crash, then Microsoft back down here to these gap fills. So I would say Microsoft is on a dip. You can begin buying up a little bit if you want to. If you need the, MSFU, I think. Yeah. So MSFU, if you want the leverage version of it to begin buying cheaper shares of it, you can look at that. Let's see. Lyft, amazing chart. Leaps and shares on Lyft, in my opinion. This has a $40 price target on it in the short term in 2026. Lyft would be one I would begin picking up shares on, buying, if you're not already in. I've mentioned that multiple times. Lyft, getting into that. PayPal, I still like it. I still like PayPal, buying up shares on PayPal, at least getting a little bit involved on shares on PayPal. There is still a little bit more room lower into the low 60s, but PayPal, in my opinion, I've still got a price target on it with the amount of cash they have on hand. If we have a recession, anything like that, what company is going to survive a recession? The company that has the most cash on hand. All right, their earnings have been great. They just need a little bit of uplift. They just partner with OpenAI. I like PayPal into the 60s, anywhere in the 60s, better into the 50s. Let's see. Yeah. Does that answer the question? Does that help? Kai, what's going on, man? What moves would you make now that the government shutdown may end very soon? Cool. All right. Another one, Grab. This one I do like. At $5, having a price target of a double up of 10 in 2026. So I do like Grab as well. Another one is a sleeper, Oscar Health. Put that on your watch list. This is also a double up, buying around $15 to $16, right around where it is right now, $15 to $16 for a plan of a $30 to a $40 price target. I know healthcare is a little bit slower. I understand that it's not the AI movement and whatnot, even though Oscar Health is involved in telehealth, but this is a beautiful chart. And when everything, just say the AI starts pulling back, consumer discretionary and healthcare will boom. So all those stocks that, the Kavas, when money gets back into people's pockets, people will go back to spending. So the Lulus, the Kavas, the Chipotles, right? They're not the sexy stuff right now, but I do not want to dismiss them. They will continue to go back to the upside once people get money back in their pockets and things start happening. But just keep an eye on those. BBAI, I like. Sitting at $5, going back to 10. So a double up from here. If it pulls back to about $4, even better. But right around in this zone, I like BBAI, $5 back to 10, 12. Okay, so I'm looking at double ups and then triple ups. This resonating with everybody? Does this help? Resonating? Does that answer the questions? Yep. So Kai, we're on the same page. Yeah, that's why I mentioned them, because people, essentially want to start developing their watch list. Like, okay, let me type that one in, keep a watch on it. Yeah, so I've got kind of my 2026 buys and leaps watch list starting to add to this. And it's the non-sexy stuff, I'll end off with crypto. Because crypto is a lot of the, what is it? Not meme stocks, but a lot of the altcoins are on discount. Okay, a lot of the altcoins are on discount. Bitfarms, Bitto, iBit, like all of these crypto names, in my opinion, are on slight discount. We're coming into the end of our 4-year run of the Bitcoin movement, of the Bitcoin halving from 2022. No. It's every 4 years. So 2020, 2024. Yeah, 2028. Yeah, is the next Bitcoin halving. So 4-year bull run. So I will cover this really quick on Bitcoin. What do I think about Bitcoin right now? Do I think it's a value at 100,000? Yeah, I think it's a pickup at 100,000. I was telling someone yesterday that the only concern, in my opinion, is just the daily moving averages. That's my only concern. All right. So picking up a dip for the first time as you were holding for longer, Bitcoin underneath all the daily moving averages, it needs to reclaim back above it. So Bitcoin can get back above that 113, then we're back. We're going back to highs, right? The only concern here is that anytime it gets underneath the moving averages, it can come lower, very similar to that pullback at the beginning of this year, right? Got underneath those daily moving averages and then started pulling and pulling and pulling until it found a bottom, and it retested right at the highs and it's back underneath them again. So when it breaks underneath, it's got to reclaim, or it can hold underneath and then start coming down lower, right? And that's kind of how it would look. Not that far, right? So I got to pull back to the mid 80s on Bitcoin, in my opinion, if it does pull back. Mid 80s on Bitcoin, mid 80,000. A dream would be back into the golden pocket at 60. That would be a dream, okay, for crypto, for Bitcoin to pull back into 60,000, very similar to this run right here. And it pulls back from 70 to 15, but that's a different era. So even if you pull back to here, that would be a higher low. From here, equal back into a buy zone, and that 60,000 would be that mark if we do somehow just have some type of crazy crash. Okay. So, but yeah, that is my analysis. I can keep going over and over again, but I just wanted to cover it. Get out of here. Sorry for the darkness. I apologize. Let me see if I can lean closer, get into y'all. Thank y'all so much for the support. As always, if we got to 2,000 subscribers this week, I'm going to celebrate for my birthday. That's awesome, on Wednesday. If you want to support the channel, become a channel member, right? Just share someone with you. You don't have to pay if you don't like to. I do not come here to ask for money. It's just of my time if I am supporting you. All right. So if you want to join Leverage University, links down below. If you want to type in Black Friday as the code, Black Friday should give you some percentage off for the entirety of the month of November. All right. For entirety of month of November. So if you do have some time to think about that, if you want to join us in live trading, we do have our event as well. Okay. So our event's coming up next week. So if you want to sign up for that, you're more than welcome as well. It's on there. All right. So thank y'all so much. Peace, love, and blessings to you. I'll see y'all in live trading tomorrow.